Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the Canadian MJ sector after a pretty bullish week. Certainly very happy bulls out there with the action that we've been seeing over the past couple of weeks. And how we are ending this week is really affects the daily and weekly time frame in determining which to be putting the most weight into, because you look at the weekly chart and we have a clear bearish reversal candlestick, but you look at the daily chart and it is very clear healthy consolidation. So I'm personally going by the daily chart, and right now we have a bullish reversal dragonfly doji after multiple days of pullback, which is very contained consolidation on decreasing bear volume, which is exactly what the bulls want to see. More bull volume on the way up, less volume on the way back, and our new support is the low right now of 1022. So 1022 is a key level. If that breaks, we know further consolidation is coming, and we'll be looking down to 10 psychological if that does break. And in terms of the bulls confirming this candlestick, we need to break 1045 on Monday and see a solid green day to be looking back at the recent high of 1089 resistance. So this is an extremely strong bull move. And even if we pull back, you know, the key support right now that I'm watching is 983, because anything above that is a higher low where we consolidated for 2 days and then we saw another leg to the upside. So anything above that level keeps the higher low strongest pattern intact. But ideally, obviously, the bulls want to hold 1022 and continue up from here. The weekly time frame continuing the higher low, higher high pattern that initiated with the bottom down in the start of June. And we have our new higher low on the weekly at 836. And moving our way up, we're entering an area with a lack of resistance. And that is very beneficial for the bulls because it's a lot easier for price action to see big gains to the upside when there's a lack of resistance. So we hit 1089, and we look back at how many times we've been above 1089, and not too many weeks, probably about 2 months worth above that level. So I'm looking right now at 1114, 1125, and 1185. So the next level after 1125 is 1185. That's over 5% before we encounter the next resistance. So we are looking for weed to hit blue sky breakout sometime as we approach 2018, July 2018. And as of right now, we're in a very strong uptrend heading towards that level. We're in breakout mode above the upper Bollinger Band, and we can consolidate significantly on the weekly time frame and still be in control with a higher low on this weekly time frame. So there is no red flags at this point for the bulls, and it does look like they are back in full control of this trend. And just looking back at resistance levels that we pulled back from, once we get above 1330, that is green light with a very significant lack of resistance back up towards the all-time high because of how quickly we pushed through that level and then fell right back. There's pretty much no price history above those levels. So 1330 is the key level for me. When we get over that level, it's time to celebrate as a bull. APH on the daily time frame, very similar, declining bear volume. If I had to be picky, I would have liked to see more volume on Friday because that does show a lot of bulls buying the dip in terms of the candlestick shape. I'm looking at both weed and APH, where if there were a spike in volume, we could attribute a lot of that to bulls buying the dip. And you see APH, not a ton of volume here. It was mostly bullish action with the open down at the low of the day. But we need follow through. So our higher low right now is 652. Anything above 615 keeps the higher low pattern. But after 652, we're looking for the bulls to break 668 on Monday and see a solid green day to confirm this candlestick and be looking back at the recent resistance of 693. So higher low, higher high pattern continuing to play out. We did break this resistance of 680, so a nice higher high for those bulls. The weekly time frame here, upper wick of profit taking, and we closed just above the upper Bollinger Band, so we are in breakout mode. There's less resistance here on APH, and what I mean by that is we hit 693, so we go back and see that only 3 times in the history, well, we actually peaked just a few times, but very briefly have we been above that range, above the 690s in the history of APH. So after 693, I'm looking up at 7 psychological, 715, and the all-time high of 877. So a lot of bullish action in terms of where we are from the low, and I could pick a lot more resistance levels on WEED than I could on APH is the bottom line. So both names approaching areas with a lack of resistance, but we're looking for all-time highs. I do believe it will come first in APH, considering that high in WEED was all the way up in the $17 range. That's still 70% from where we stand, whereas APH on the weekly time frame to get up to 877, not nearly as significant. So keeping a close eye on both names. They both are definitely correlated together. And note how nobody cares anymore about the U.S. holdings in APH, at least at this point. It was a bear attack, in my opinion. It was catching the news and the center of attention. And now that the bulls show up, suddenly nobody cares about it. And we're seeing just as strong a correlation with the name WEED that doesn't have U.S. holdings compared to APH that does. So in my opinion, it's something to keep an eye on, and it will come back into play every now and again. But I don't think it's a significant impact in whether or not, bulls are looking to play this name or not. ACB, also a very clear higher low, higher high pattern. Anything above 255 keeps the higher lows. The bulls are hoping that it's going to be at 269.5. We call that 270 here. Bulls need to break 279, and then we're looking up at 284 resistance from there for the bulls to try to see some continuation. The weekly time frame, the upper Bollinger Band resistance rejecting the price, but we now have a very clear higher low and higher high by getting over 282, and the trend has shifted back in favor of the bulls after 284, the recent high from this past week. We're looking at 290, and then again, a lack of resistance. $3 psychological, and then 348 comes after that. So the bulls have some nice room. You can see the volume on the weekly has been picking up. So the bulls are back in full control of the sector. There's no doubt about that. And even APH now catching up to the other two names in terms of strength had a lot more work to do due to the more significant pullback back in May and June. EMC is not nearly as bullish as those other three, which is why I'm liking APH and WEED, as I've highlighted. Those are my go-tos for the solid long-term plays. The other names are higher risk and higher reward. So EMC is trying to change this trend, but still a lot of work to do. 188 is resistance. I'm looking at 190 and 188 as previous resistance. So we're topping out at those resistances again. And then if we get over 190, we'll enter an area of a lack of resistance up to about $2 psychological. So the higher low right now is 173, and bulls need to break 183 to try and be heading back up towards that 188 recent resistance. The weekly time frame shows the bulls have a lot more work to do, but we're close to seeing a tightening pattern break. Could still play out for a few more weeks, where we have our 200-week moving average of support that has held 5 tests. We have our middle Bollinger Band resistance, which has been rejecting bounces. We have 1, 2, just pulled back shy of it. So 3, 4, 5 rejections from the middle Bollinger Band on the weekly, essentially. And if we close above that level, we will be looking for a break of this descending triangle pattern. The descending triangle has essentially a horizontal base of support and then lower highs, tightening ranges. And we have to break 190 to see a break of the lower high pattern, as we topped out at 188. The middle Bollinger Band on the weekly will be in the low 180s this coming week. We'll have to keep an eye on that. And the bull MAC decross is ready to go. So keep an eye on EMC, because once the bulls do break this momentum and shift to a bullish trend, we have not been in an uptrend since the first month of the IPO, or the initial offering. So keeping an eye on it, because it will provide more significant gains in the short term, in my opinion, when that break does occur. FIRE, very significant move, but a flush here and a big drop, which is scary. That just shows that it's thinly traded, where a little bit of volume can go a long way, where the price can go from 140 to 129 very quickly. That's a very significant drop. The bulls did buy that dip, but right now support is 129 and 135. The bulls are trying to see this healthy consolidation come to an end and head back up to the recent high of 143. The weekly time frame, nice higher low and higher high, and we're looking back without a whole lot of price action here, just because FIRE, the newer ticker, we're looking up at 144 and 149 as the next two resistance levels. Really nice increasing bull volume here. And again, same as the other names that we're watching, if we're just looking for healthy consolidation and then continuation, any increases in bear volume on any name on the daily time frame will be an indication that this bull flag on the daily time frame that we just looked at is not going to follow through. So if we see high bear volume and a weak day, then we know, okay, this consolidation is probably going to take a little bit more time, and we need to be patient, and that bull flag is not likely. So volume will be my key for potentially negating this bull flag. MJN also seeing some nice follow through, trying to build a base of support at 256. Resistance is 267 and 272. Higher lows and higher highs. The weekly time frame, upper Bollinger Band resistance. This weekly time frame looks a lot like the big three, with its low in June and then higher lows and higher highs. And in terms of resistance, after 272, there is a bunch of resistance to be looking at. 287, 297, 314, 354. So there is still a bunch of resistance, but as far as the higher low and the higher highs go on the weekly time frame, the bulls do still have that pattern. And the weekly chart is also another potential bull flag on decreasing volume consolidation. And again, increasing bear volume and a break of the recent low would mean take a step back, as we are likely to see further consolidation. HMMJ, the sector, same pattern. This is the kind of volume where you look at that volume and you say, uh-oh, that's big red bear volume. But then you look at the candlestick and say, well, a lot of that was bulls buying the dip and closing back close to the high of the day. So that is a bullish hammer. 924 is the support the bulls want to hold now. And if we see a break of 935 on Monday and a green day, we will look to confirm this candlestick and head back to the recent high of 955. We also still have 966 resistance. This weekly time frame does not have a clear higher low and higher high yet. We've been in a downtrend since inception, and now we are looking at a break. If we get this break of 966, that is a clear momentum change, but this is a bearish reversal shooting star candlestick on the weekly, and we will, if I were to look at this alone, I would say we're likely to consolidate, but the daily time frame, it's up to the bulls to follow through and negate that weekly bearish reversal candlestick on all these names if this bull flag on the daily does end up getting that continuation and heading to higher highs. So cautious because of the weekly candlesticks are showing us weakness, but we know the daily chart with more details is still showing a lot of strength. So Monday's a pretty important day as to whether or not the bulls can follow through with the strong close we saw at the end of this week. A lot of names like WEED and APH closing right up at the high of the day with some bull volume coming in. So that's what we'll be looking for on Monday. And again, red bear volume with the shape of the candlestick coinciding with that bearish volume will be an indication that this bull flag is not going to play out. We'll check back in next weekend. I appreciate you watching and hope you have a good rest of your Sunday.